You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's happening to your options portfolio? Let's find out together. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Glad to see so many of you are joining us these days, live, after the fact, on demand, wherever you get it from. A growing number of you hitting us up from all sorts of interesting other platforms you like, and more of you like in the YouTubes, even Podbeans, you name it. All sorts of platforms out there, you guys. Wherever you guys get the show, we don't judge. As long as you listen, if you like what you hear, make sure you leave a review on whatever platform you're using to listen to the show so other folks can continue to discover the program. And of course, if you have a question, hit us up. We do love to hear from you. Well, most of you. I'd say like 98% of you we like to hear from. The Rock Lobster, he's angry at all of you, so that's a whole different story. And let's see who's joining me on the show. Since I have besmirched him, we'll start off with the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir.
It is great to be here on this, getting ready for this 4th of July weekend. Woohoo! That's as celebratory as I can get. Because I'm just, a curmudgeon, so that's what it is.
You are quite curmudgeonly. But you know who's not curmudgeonly, because he's always happy. It is the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here. Looking forward to celebrating the birthday of, by far, the greatest country of all time.
Well, there you go. Uncle Mike, patriotic as ever, as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our collective tapes. And it seems like yet again, the bull has been unleashed. He's broken loose from the pen, and he's on the rampage here to end this shortened holiday week. A lot of this bullish love. Let's get the numbers first, and we'll get to maybe why we think we're seeing this. Most of the major indices up strong. It seemed like they might be fading a little bit, but now they're getting it all back. NASDAQ up over 1%, about 1.06%. S&P and Dow both up exactly 0.93%, so they're threatening that up 1% level out there. Our old friend VIX Cash taking a bit of a break. So if we had a vol views tomorrow, which we prognosticated last week, we forgot that it was a holiday tomorrow. So no vol views tomorrow, unfortunately. We'll see if we can get you some quality recorded, maybe best of content for you so you guys can have your vol fix on a holiday there. But yeah, I don't think anyone had maybe this low. We'll see, at about a 26.75 coming into the show. That puts us down, looks like nearly 7 handles from where we were this time last show. Our old friend VVIX, a.k.a. the vol of vol, a little bit shy of the 120 handle, 119.5, so still right around that frothy elevated level, but down from about 6 points from where it was this time last show. And our old friend VXX coming into the start of the show. Let's see, where are we? We were at a 36.5 on our last show. Now we're closing in on 31.5, so down about 5 from last show out here. So a lot to parse out here. Of course, what is driving all this madness? Well, a lot of things. We saw yet another strong jobs report. U.S. adding 4.8 million jobs in June. That compared with expectations of about 3.7. Unemployment rate falling for second straight month to 11.1%. All that's good news. And yet, if you look looking in the rearview mirror, it looks like maybe some good stuff as we toyed with reopening the economy. Of course, if you look ahead, it's not looking so good. We have, McDonald's choosing to delay the reopening of their in-store dining. We had some massive franchisee, I believe it was Wendy's and Pizza Hut's today, that employs about 40,000 people filing for bankruptcy today. Apple deciding to delay the reopening of their stores out there. California may be considering going back into lockdown. I think some counties actually are going back into lockdown again. So a bit of a reversal, perhaps, of the trends we've seen. Maybe we got a little bit ahead of ourselves with the diving in to the reopening. People filing for jobless claims also slowed, so that's maybe back on the bullish tip as well. Actually, no, the number of people receiving total jobless claims actually rose 59,000. So not a huge increase, but still a little bit of an increase there as people looking for overall jobless claims out there. So a lot to unpack. We'll get to how all this is impacting the options market in a second. But first, let's go around the horn. Let's start with the Uncle list of Mikes. Mr. Uncle Mike, sir, what is lighting up your tape on yet another unstoppable Uncle Mike bullish day, sir?
Well, I'm still in the school of thought, buy the dump, sell the hump, don't diddle in the middle. And we've been in a channel with the S&P, or at least with SPY, between roughly 300 and low 320s for the past few weeks. And so until we can break through to being positive on the year, I'm still not a major buyer in this. Now, I did try to get into some smaller positions because my rules dictate I can buy smaller positions even on a negative market earlier in the week. Couldn't quite get filled. I mean, I think this is the type of market you really need to be stubborn in if you don't get the fill that you want. But with that, I think that we're kind of in the middle right now. I think with the numbers that came out earlier this morning, markets went up. Doesn't appear that we're making any newer highs right now. We're closer, but we're still not surging upward. A lot of this movement came from the numbers that were earlier today. The first thing that I thought when President Trump was out there speaking, if I were, and I don't blame him for doing this, if I'm a president, I want to be on TV with a lot of green on the screen around me as I'm talking. And so I'm willing to bet that was kind of played into the reason why he wanted to talk today at the times with which he did. And so with that, I'm not sure if this is going to continue, but right now this is very much, we're still kind of in no man's land where the market is right now within the channel that we are between 300 and 320 based upon SPY. So with that, I think that once we go positive on the year again, hey, I will jump on board. But I hate to be. It's really weird for me on this show so much the last couple of months to be the Debbie Downer all the time. But market is still negative on the year, and in my opinion, when we have a negative market, it's not a strong market, and that's not a market I want to be long.
Yeah, we talked about it before here on the show. Despite the fact that we have endless rallies here, this is also one of the most, if not the most shorted market from an S&P futures perspective, going back all the way to 2011, nearly a decade out there. So you're right. It's hard to say with a straight face, but it is definitely the most faded rally we've seen in quite some time. Yet all that is moot because the rally continues seemingly unabated, though when it does retreat, it seems like it retreats pretty hard, as we saw a few times over the past few weeks. Mr. Rock Lobster, same question for you, sir. What is lighting up your tape here coming into the end of this abbreviated but still bullish holiday trading week, sir?
Tesla.
I'm not familiar with that. What is that, sir?
I know it's just a day with the wine. It's up another $100, but I mean, I'm glad Elon Musk didn't take the $400 a share because it's worth like $1,200 now. So I You're seeing I'm starting to see inklings of, everybody kind of getting back to solar power and looking at alternative energy. The TAN, which is an alternative energy index, is getting closer to the highs it had in January. Tesla, I guess Tesla is the blue chip. It's the blue chip technology company. I think I own like 20 shares or 40 shares or something, but it's it's crazy. But it doesn't matter, to be honest. Tesla's worth more than Exxon, worth every other automobile company. I find it amazing, but nothing surprises me when stocks want to go up. So I think that is, Facebook now has pretty much shrugged everything off. Amazon is at an unbelievable valuation. It's not that Amazon is not a great company, but oh my gosh, it is, so like the diehard fundamentalist in me has some sort of trouble with that. But it doesn't really matter because it just keeps going up and up and up. But it's got 100 PE. I guess it's not crazy, to be honest. The company is now actually making a lot of money, and maybe by next year the PE will only be 50 times. So they're definitely in, and maybe they do deserve their valuation, but it's still all-time high. And at this point, is it any doubt it's going to be 3,000 by the end of this month? I don't think so. At least into earnings, I don't see why not. Because almost everybody and their mother and brother bought something. So like these what I'll just call the main tech stocks have just consumed all the oxygen. That's kept, I think, the S&P 500 up. But if you look at all what I'll just call old industries that were around at the turn of the century, even at the turn of 2000, right? Banking, oil industry, retail, all that, just nobody gives a damn about those stocks at all. So I've been nibbling on some of them, airlines even, but I think they're very long term. And the COVID thing it doesn't go away. So that's the basic thing. It's not going away. We'll see in a couple of weeks if the mortality rate catches up with the surge in cases. And I think the market's kind of sitting right there on that. And we've been at this level before 3-4 weeks ago, and we seem to be back here again. So VIX, the magic number, making a new low for COVID would be somewhere below 25. And we're not there yet, but a couple more days of action like this, and we easily could be. So I just think for vol is, it feels kind of fairly priced. I think we were trading 3,000 on Monday, SPX. So we have had a 150-point rally in the SPX since at least Friday, somewhere mid-Friday to today. So, you look at it and you go, oh my gosh. So the market is definitely, it has totally shrugged off the COVID, the surge. Mostly, I'm just guessing, is that the market's handicapping that this surge is not going to be that big a deal. People are getting it. Maybe they're going to stay home and do the right thing, but it's not going to cause the huge mortality, and the hospitals aren't going to get overrun. I think that's the bet. I don't know how it's going to turn out, but it feels like that's where some of the money is going in that direction.
Yeah, it is amazing. I've said it before, when it seems like the big outlier now is, of course, some sort of treatment for the coronavirus. And once that's on the horizon in any meaningful form, it's just going to be look out above. There's going to be no reason not to buy stocks at that point. Because if stocks can rally in light of all this, all of this has gone on, a global pandemic with no end in sight, lingering trade war and tensions overseas and everything else, all the other things that have happened over the past few months, the U.S. literally burning itself, all these things, if the market could just laugh past all of this and literally whistle past the graveyard. If the Fed can step in and support it at those moments, then if it can survive those systemic shocks, then once we get out of the woods with this coronavirus, which obviously we clearly are still not, hence my my reluctance to go full hog. I got a little bit of Uncle Mike floating around in me as well out there. But once that is obviously behind us, then it's going to be just what could possibly stop the bull. It's going to be a bull market for another 20 years. Because if these things can't derail the bull, then nothing can stop it out there. At the end of the day, our economy is apparently all 4 companies. We're all Amazon, Facebook, and a handful of others. And that's all that matters out there. Forget your corner bodega. Forget all these restaurants going out of business. But that's a conversation for another day. Let's see what's lighting it up out here. You mentioned Tesla. We'll get to that in a second, sir, because spoiler alert, it's doing some paper today. But let's see what's lighting it up in the broad market out there right now. VIX, as of a few minutes ago, about 130,000 contracts. So pretty light paper in VIX land. ADV has ticked up over 400K. It's about 412. SPY at about 3.2 million as of a few minutes ago. The ADV, about 5.6 million or so out there. So pretty light day overall in SPY as well. A little bit more than half of their ADV on the tape. S at about almost 800K. So a pretty decent day for the S, given the fact that it's a, shall we say, reduced ADV right now of about 1.2 million. 800,000 is looking pretty good. So maybe they'll finally beat that out there today. Q 614,000, the ADV 937,000, so about 2/3 closing in on out there. So interesting stuff out there. And the Russell, aka IWM, at about 422, the ADV a little bit shy of 700K out there. Let's break into the top 10 most active single names out here. We've got our friends across the street here, Boeing. Number 10, 207,000. That's what it cost you to break into the top 10 today. So that shows you it's a pretty active day. When it's more than 200K as the bar to get into the top 10, that's a pretty active day. Number 9, Roku. Roku back in the top 10, 216. Number 8, the Tesla counterpart out there, the first name, Nikola, 240,000. Number 7, Microsoft, 254 on the tape. Number 6, PCG at about 286,000. Number 5, the aforementioned by the Rock Lobster, Facebook. All the way down there at number 5, 351,000. Number 4, Amazon, 365. Number 3, NIO, getting back in electric car realm, 448,000 for them. Numero dos here, Apple. Apple has fallen to a paltry number 2, 536,000. That means what could it possibly be at number 1? Yeah, you guessed it. It's Tesla. 622,000 contracts out there. Oh my goodness. Stocks up 85.5 handles. As we speak, listeners, up 7.6% at 1,205. Just say that out loud. 1,205. What was it? What was the takeover price? Was it 720 or 420? I know it was on 420, I think, when he said it. But either way, we are orders of magnitude higher than when the funding secured tweet, the infamous tweet, came out. You pull up Tesla, the first link that comes up. Is Tesla overvalued? That's an interesting question given these levels. I guess they had a big beat on second quarter deliveries, and that's what's driving all of this paper. Speaking of the paper out here, let's see what is lighting it up out here in Tesla land. Seems like folks are liking some big prints to the upside. Also, though, the biggest print out there today are 2,000 lots of the July 800 puts, which in and of itself sounds like an absurd strike. But these are going out on the 10th. So these are very near term. July 10th, 800 puts. Someone gobbling up about 4,000 of those for 71 to 72 cents, lifting the offers. So someone's fading this rally, expecting a roughly 33% sell-off in the next week or so. Given Tesla, it wouldn't surprise me out here, but still, interesting paper out here. A lot of contracts on the tape coming into showtime. It was fairly active. Let's see out here. The biggest, most active contract are the 1220s in July, doing 41,000 contracts, followed by 35,000 of the July 1200 puts out there. These are not all in one block, listeners. These are just, this is just what's lighting it up. And speaking of what's lighting it up, Mr. Rock Lobster, since Tesla is dominating the tape again today, we got to play our old game. Haven't done it in a while. We haven't checked in on the top, the hot, the most active options that are out there in Tesla right now from an open interest perspective. So I even played myself. I guessed before this, before I ran the scan, so I could play along with you guys as well. Once I have the numbers in front of me, I can't play. So the game is going to be guess the number one largest open interest position out there in Tesla land. And given our past history with this name, I immediately guessed the Jan 2021 par puts, because we know from past his prologue, people like loading up on those ridiculous puts. I will give you a hint. I was not correct. I was actually number 2, but only by a mere, 17 contracts. So something out there has done more paper than the Jan par puts in Tesla by 17 contracts. Let's go to Uncle Mike first. Uncle Mike, you get to play too. What is your guess for the number one hot strike out there in Tesla options right now, sir?
I will go with the December 1,000 puts.
Interesting. Very rational. Rational choice. All right, I won't reveal your answer's accuracy or not yet. Mr. Rock Lobster, same question for you. Like I said, I went with the Jan par puts, and I was number 2 by 17 contracts. What could dare outpace the Jan par puts by 17 contracts, sir? Have at it.
Jan par is thousands or hundreds?
Yeah, it's confusing now, right? In the old school days, it was 100. That's where I went. I went 100, yes.
I'm going to go, I just think people are getting really happy, so I'm going to go like 1,500 call in January.
Oh, no, sir. You got to go all the way down to like number 15 to find the first call on the list. There's no calls open here. We're not playing in calls in Tesla, sir. Where have you been on the show? You know it's all puts all the time.
Yeah,
the Jan par puts, the Jan 100 puts, just to clarify, 20,634 of those are open. They are number 2. Number 1 with 20,651 are the DEES 380 puts. A weird strike. And then number 3, we've got the Jan 5.0, 5 even puts. There's almost 19,000 of those, Mr. Rocklop. Someone has added about 3,400 of those recently. So, yeah, Jan 5 puts, 5.0. 5.0 puts are number 3. Number 4, the Jan 50 puts, 18, almost 19,000 of those as well. Number 5 of the top 10, the Jan 10 puts with 18,000 and change. And you got Jan 20 puts, June 5 puts, Jan 200 puts, Jan 350 puts, Jan 380 puts, and then July 200 puts. All those come before the first call, which is the July 1,200 call at 11,700. So clearly we're fading Tesla here, at least in the net OI perspective. So if you're wondering what the hot paper out there in Tesla, not today, because I told you what was lighting it up today, but in the aggregate over time, what the biggest positions are open out there in Tesla land, it's still all puts all the time, including the 5 puts. I mean, that's just, I think the technical term for that is redonkulous. You know what else was redonkulous? Was the options volume for June. Gentlemen, the numbers are in hot off the presses from our friends over there at OCC. Let's break them down. A lot of people have been asking us, hey, how does all this vol and all this movement and everything else, how this pandemic, how does this impacting options volume? Well, here's your answer. OCC announcing June total cleared volume, 693 million contracts. That is, in case you're wondering, for those of you playing at home, the highest ever monthly volume for the equity options business ever. It's never done that much before. It's up nearly 81%, 80.7% from June of last year. Blew the doors off the previous record, which was set back in the maelstrom of March. So we even beat March listeners in June. Back in March, the record was 670.6 million contracts, and this blew it away by about almost 3.5%. Also, some hot trading days out here. Let's break down the hot trading days. 3 of the top trading days of all time were just last month. If you're curious, the number 1 trading day of all time is February 28th, which is an interesting one. You think it would have been more in the teeth of the madness in March, but no, it was on February 28th, which is kind of right when we were on the precipice of that big sell-off there. 48.9 million contracts is number 1. That's February 28th. Number 2, June 11th, 48 million, pretty much even. Number 3, June 5th, 47.5 million. Number 4, February 27th, so the end of February, rocking and rolling, 45.4 million. And rounding out the top 5 here is June 12th with 43.15 million. So June accounting for 3 of the top 5 days of all time and the number 1 month of all time when it comes to options. Let's break it down a little bit further. Total volume, like we said, options. Remember, OCC clears some other stuff in there too. So you strip out that, you're down to about 688.5 million. It's up 82.2% from last June. Drill down a little bit further. Equity options, 651 million. That's up 91% from June of last year. Drill down a little bit further, get to cleared ETF options, That was 245.4 million, up nearly 70% from this time last year. Index options volume, another one that's kind of been languishing of late, which is kind of interesting given all the action we've had. That one was 37.4 million. That's up 1.1%. So it managed to have a modest, about as modest as you can get, but still a modest increase there. So index options, I think some of that, of course, the pits having gone away and all the other issues going on out there. And also kind of the weird bifurcation. Where does SPY fall? Does it fall in ETFs? Does it fall in indexes? It obviously can hang in both. SPY obviously still doing a lot of paper out there. Let's go to futures. Futures have been another kind of trouble spot. Remember, OCC pretty much just clears VIX futures at this point. Not a heck of a lot else ever since SIBO delisted their Bitcoin future out there. They had 4.5 million contracts. That's still a decrease, a 19.5% decrease. That just puts it in perspective, listeners. Options are having the busiest month they've ever had, 3 of the busiest days that they've ever had, and the futures are still off nearly 20%. You know, the VIX futures never really recovered from the death of XIV, and now that some others like TVIX and others are kind of going the way of the dodo, that doesn't bode well for the future of VIX futures, pun intended, out there. That's clearly why SIBO is rushing out the gate with that volatility share startup to try to bring new ETPs to the table to maybe replace those, because they realize they need those to churn and burn some futures volume. So even at a record month for options, the futures kind of just fallen off a cliff, gents. Let's see what else is falling off or perhaps lighting it up as we head on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, we already parsed Tesla, talked about those so juicy Jan 5 puts. Let's see what's lighting it up now with our Eye of Sauron. He has been unleashed. He has returned to us. He has fixed his gaze upon a few things. One of them is kind of hard to miss. It's kind of the elephant in the room today, outside of Tesla, which is doing big paper. Mr. Rocklops, this is a name you may be familiar with. I think the ticker symbol is GM. Does that ring a bell to you, sir?
GM with a G and an M?
I do believe that's how it's spelled, yes.
Is that one of those last century companies?
I think they make
that nobody
buggy
cares
whips.
about?
Yes, a modern day buggy whip manufacturer. Of course, GM, big name in the car space. Ticker symbol, of course, appropriately enough, GM. At about 25.5, up 61 cents. This has been an interesting year for all the auto names, not just Tesla, even though Tesla is kind of worth more than all of them combined, it seems like these days. A year ago, let's see, GM was at about 38 and a third, so well north of where it is right now, and it kind of hung out near those levels, sold off a little bit. Getting into the big February sell-off, it was right around $35, and then it hit the skids, obviously like everything else. In the madness of mid-March, it got down to $14.32. Oh, how low it got. And then it kind of had a few fits and starts since then, a lot of peaks and troughs, but it made its way up back to not quite unch, but pretty close, nearly 30 and a half or so, back in early June. And then it's sold off again since then, hit down to about 24 and a half, and now it's rebounding up to about 25 and a half over the last few sessions. So it's been an interesting topsy-turvy period here for GM. Let's see what our Eye of Sauron has uncovered out here. This is the size print, Mr. Rock Lobster. Probably the biggest individual equity option print out here. I'm surprised this wasn't enough by itself to catapult GM into our top 10 most active. It's pretty darn close. This one print alone almost puts it in the top 10. I guess nothing else is printing out here except for this. Because, let's see here. Our Eye of Sauron returned, listeners, looks like a pretty massive bullish risk reversal. It was the AUG 26.5 calls expiring on the 7th, so in the weeklies, going up for $1.10, 71,500 times against the AUG 25 puts, also expiring on the 7th, so all in that same expiration cycle there, going up for $1.29, which is right off the bid, a penny off the bid, 70,000 times for those. Both of those were clearly opening, otherwise our Eye of Sauron wouldn't even bother if it was kind of just a roll. So sizable, massive, pretty much effective stock position. Someone wants to get himself a little bit, a few million or 7 or so million shares of GM on this bad boy. Doing it, like we said, for about 19 cents here. The put clearly over because it's closer. And let's see here. Yeah, these went up on the NOM. There is earnings in this cycle, so that's probably why they hung out in the weeklies. Though, yeah, it's earnings are the 29th, so they went to the next pretty much cycle after that here. So, Mr. Rock Lobster, this is an interesting one. Very near term. Actually, no, August 7th, so we got about a month here, so a little more than a month. And then, but still, very near term trade here. It's obviously got an earnings component to it, and it's massive. 70,000 contracts in a bullish risk reversal. It's like someone cracked open the old Options 101 textbook and said, ooh, I can use what to synthetically get myself bullish exposure to X stock? I'm going to do that. And I'm going to do it 70,000 times. What are your thoughts here on someone, looks like getting size long, some GM, sir?
I look at this and I'm like, I guess, maybe there's a margin. The thing is, like, when you do the trade like this, it just looks like stock. I mean, I don't know what there's a small, I don't even know if there's a margin gain. Okay, so the stock stays here. It doesn't cost them anything. I guess if you want to be long, it's fine. But it looks like they're trying to take delivery of the stock some way, somehow. And I mean, from that point of view, it doesn't look bad, but I don't know how much of a gain you get by doing the risk reversal. Buying the call, selling the put, that close to the money. It's just, I don't see what the big benefit is. I mean, you do get it for a credit, so that does give you an entry below 25. So I guess in that point, it's good. And then you'll figure out you'll have to take delivery at some point. But for an option trade, it's just big. I guess that's all I can say on this. It's just a big way to get long.
Yeah, that's pretty much what drew the eye of Sauron. It was inescapable, this one today. It took up all the oxygen in the room. It was enormous. And once you started digging in, you saw the other legs going up. And you're right, that was my first blush as well. This is effectively stock. It's a strike and a half distance between the calls and the puts. It's not the typical risk reversal we like to think of, like, the 25 delta put, 25 delta call, something a little bit more in that vein out here. This is kind of effectively not quite a conversion reversal, but a pretty darn close here on this bad boy. So you know what we're going to do, listeners? We're going to mark this one to be watched so we can come back to it, because I got the feeling, go figure, I got the feeling that something may be afoot out here in GM. Either way, someone's putting some size capital to work out here. If that's just too much for you listeners, it's too much for your brain to wrap around 140-odd thousand contracts in one print, we'll dial it back for you a little bit. We'll make it a little bit easier. Next up here, this one hot off the eye of Sauron, just coming in as we started the odd block here. This is Taiwan Semiconductor. Obviously, you wonder what they do. Ticker symbol TSM, trading 59.04, up $2.22 today, or nearly 4%. So a good day for Taiwan Semi. A year ago, this name was trading about $40. So up strong, up pretty much 50% from that level. They tapped out, let's see. They got up to pretty much about this level right before the sell-off. They were 59.63, so right about where they are right now. Right in early to mid-February. Then they sold off. They got down to 43.89. So they didn't even get down to the 52-week low in the middle of the March sell-off. And they pretty much immediately rallied by the end of April. They were trading about 55 again. And then by, of course, now they're up to 59 again. So pretty much all the sell-off has been reversed out here in Taiwan Semi. Looks like a pretty good last few months out here. Let's see what our Eye of Sauron just flagged for us. Mr. Rock Lobster, looks like this appears to be a little bit of the old school odd block call love. In particular, it was the July 61 calls. So near term, expiring in a few weeks here, and not that far out of the money. 61, couple of handles away here, going up for 60 cents. They were 42 cents at 60 cents, at 66 cents when this trade went up. These went up on the Philly, looks like. There are some earnings between now and then. Earnings are on the 16th of July. So it looks like a bit of an earnings old school upside call swing for the fences here, Mr. Rocklobster. Not a huge one, not spending all the money, but spending some cash to go out there and try to at least hit a nice double the triple here. Would you concur here in Taiwan Semiconductor, sir?
Taiwan Semiconductor. It's like is that the Intel of Taiwan? Is that fair to say it's the Intel of Taiwan?
Sure. Maybe
not.
If they're not, we have now labeled them as such.
And of course we'll probably get some hate mail over that. Like I think old Taiwan Semiconductor it feels like it has grown with the rest of technology, the rest of the technology business. So looking at this, do you feel like this is you think they were buying this contract? 60, yeah, maybe so, huh?
You think they sold it for a couple of cents off? If that's the case, they got a pretty good broker. I want to go with their broker.
It looks like I can't believe that's a sale. That looks like a great sale. If it was, I don't see that. I don't see that happening. But I think it's just an earnings play, a technology earnings play, and it's bold. The stock is up, but I keep looking at these earnings. I can't imagine any of these earnings are going to be good for any of these companies. Let's see. These are the July 61 calls for 60 cents. Are they even at the money right now? I'm just trying to look at them. They're just, yeah. They're up money the first day. So I guess everything technology is good. I guess that's the only rule you need to know. If it's tech, it's good.
Especially when you're buying the Intel of Taiwan, which we have now christened this name. We're going to watch this one and come back to it in a few weeks, see how it fares. That's a pretty aggressive. It's $1.80 or so they're dropping for a swing at the fences here. So not a cheap step up to the plate here. Since we're talking about watching something, let's go back to review one we just talked about on the show not too long ago. On May 18th, we highlighted some, looks like line in the sand puts, at least we thought they were at the time, in Medallia Inc., ticker symbol MDLA. I'll leave off where it's trading right now to avoid spoilers. But at the time, we profiled 12,256 of the June 17 half puts going up for 15 cents. So there were 5 cents at 40. Seemed like someone was getting a little bit of the old risk premium, squeezing whatever juice they could out of these puts and drawing a nice little line in the sand here at 17.5. At the time of this trade, the stock was $25.84. So it wasn't that aggressive of a line in the sand. It was a decent line. If they figured if it dropped down to that level again, they'll pick themselves up a little bit of Medallia at a pretty attractive level. And it seems like that line was a pretty decent one because it never really threatened it to the downside. In fact, on expiration, the stock went out at $27.13. So clearly, these puts were pretty much in the rearview mirror. They were in the rearview mirror fairly quickly, actually. Looks like they came back and closed a decent chunk of them, about half or so, on the 3rd. So a few weeks later, they came back and they closed them out for 3 cents. So they immediately decided, let's take at least a good chunk of them off the table. So they don't have that old, we talk about it many times, listeners, once it gets down to a nickel and below, take them off. All you have is risk at that point. They decided that was the case, took off about half of them on the 3rd. The rest went out worthless. So it seems like Mr. Rocklobster, our guy before, was spending $1.80 on these calls. This guy made about $1.80 on these calls. Maybe it's the same guy. Maybe he took his Medallia put profit and he's piling into Taiwan Semi now. What do you think, sir?
Jason, do you think that's the trade out of the semis and into Medallia?
That's the oldest pairs trade in the book, right? Everyone knows that. The Medallia Taiwan Semi pairs trade. It's like cliche at this point.
It's like sometimes these are the problems. It's not like a problem with the guy made money clearly, or guy or girl, whoever made money. But the stock's up pretty considerably, and you end up just making 15 cents. I know that's better than nothing, but still, just making 15 cents on anything is just so not exciting. It's $180,000. Like we said, it's. This usually these are like Ferrari money for these guys, but I think it's still ultimately it's 15 cents. But it's $180,000.
Yeah, you're right. It's hard when that's the old schism of selling puts, right? When it works out, you're happy, but then also if it works out too well in your favor, you're like, oh, I should have maybe bought the stock or at least bought some calls or got something to capture more of that upside premium. That's probably the case here. He missed out on more than a few handles here in the stock, but he got $180, so he can't be too sad, and we won't be too sad. I guess it depends what you send us as we head right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, it's Thursday. Time for you guys to take your seat on the All-Star panel, ask us your questions, whatever's on your brain. A lot of you guys had Italian beef versus Philly cheesesteak on the brain, courtesy of our debate on vol views last week and the subsequent poll we put out there. It seems like the numbers stayed consistent in terms of percentages. It was pretty much Philly cheesesteak. I don't think these numbers are exact. I think the final numbers were around 2/3 for Philly cheesesteak and about 1/3 for Italian beef. So no love for Italian beef. I get you. Philly cheesesteak is a much more, I think, widely known delicacy than the more localized phenomenon that is Italian beef. A lot of people chiming in. Apparently there's some Philly lingo that I'm missing here. I didn't realize because J4340 said whiz-wit. And then Steve Sosnick chimed in with prov-wit. So I'm guessing that's provolone with and cheese whiz wit. So apparently in Philly, you don't say with, you say wit. So I guess I've learned something today, all you diehard Philly fanatics out there. If I say with, I'm a vulgarian. You got to say wit, apparently. So there you go. I've learned something. And then Max K chimed in, says, I'll take a pastrami on rye from Katz's Deli in New York City. Okay, I'm with you. I've heard it. I've never had that. I've had many pastramis on rye in my day, obviously, but not from Katz's Deli in New York. When things are opened up again, I'll have to go check that one out for myself. But a little bit of fun out there today. Let's see what else you guys have on the brain. Uncle Mike was saying earlier he wants to wait until the markets are positive. Until then, he's not a buyer of this rally. Suleiman Lalani was listening. He says, okay to buy the bigger beast of NASDAQ. It is 700 points above previous all-time high with no sight of stopping upward trajectory. So Uncle Mike, Suleiman wants to know that you mostly hang out and spy, but how do your rules apply to NASDAQ now that it's off to the races, sir?
Good gosh, I don't know. I haven't done any. I don't think I've traded the Qs or an NDX or any trade like that in over 10 years, quite honestly. I think that, because the S&P 500 does represent 80% of all of U.S. business and commerce. And so that's kind of where I like to stay at and play at and be more comfortable. It goes to the age-old debate. Do you buy the momentum or do you buy the dip? And so right now, if you're to buy the NASDAQ, you're obviously buying the momentum with where things are going. And so what you're betting on would be companies like Facebook, like Amazon, companies like that continuing to do well, which even they've shown that even in COVID, they can do very well. And so I think that you need to look at the individual stocks with which you're investing in. Now, the S&P 500, that's a lot more broad-based, but the NASDAQ, that's something to where it is going to be a lot more tech-heavy. And so if you think that we can continue to go higher with those companies I just mentioned, then NASDAQ may not be a bad idea.
Well, Suleiman clearly is feeling the bullish love for NASDAQ. And you're right, this has been a weird market. It kind of depends where you're looking. It's very much trifurcated. Old world Dow, S&P, kind of the Goldilocks. NASDAQ, very tech-centric. Of course, can't say S&P is tech-light anymore. So, and then, of course, Russell 2000 kind of off to its own devices, moving and shaking every single week out there. So it kind of depends where you hang your hat, what kind of year you're having so far, and how that year shakes up according to the Uncle Mike rule set. All right, next up, Jake Smith. He's all fired up about McDonald's. We put something out there this morning about how McDonald's is putting its reopening plans on hold as coronavirus cases rise, and he chimed in saying, so gap up this morning because that has to be bullish. Yeah, it's one of those weird markets there, Jake, where the worst news seems like that's just cause to rally. I've said it before, I'll say it again. It does seem like a certain segment of this market is very much whistling past the graveyard here. It's not McDonald's, though. McDonald's is down on the day, even though it looks like they're threatening to be unched now. Clearly, that's not bullish news for them. They wanted to have in-person dining again. Clearly, their franchisees must be struggling, even though drive-through probably accounts for a decent percentage of their business, certainly compared to your standard sit-down restaurant. So some of them could be faring all right. And also, McDonald's food's pretty heavily cooked at a high temperature. It's kind of safe from a virus perspective. It's not like someone sitting there making a salad and maybe they cough all over it or something. So I could see how McDonald's maybe is faring better than others, but still, this news not bullish. They hit a low this morning of 183.20, and they've since bounced off that now. They're at 184.63. Pretty much puts them at unched on the day, but I'm with you. Yeah, that news certainly doesn't lead to the rally ho we saw, and yet we saw it, so c'est la vie. Similar comments coming out of Outcast ED. We were mentioning earlier on our network and indeed on the website there that Disney was postponing Mulan to August because of the coronavirus cases. They want to put it out into theaters, obviously, and that's not an option right now. And he chimed in and said, unleash the put options. These are weird times. As I was just saying to, I believe it was Jake earlier, news you might think would be bearish doesn't really have the impact you might think. Right now, Disney up on the day. Obviously, this news came out a few sessions ago, but they've had a good week. They were trading 110 on Tuesday. They're at about 113.25 right now. So a decent week out here for Disney. Not too long ago, they were down at 108. A week ago, they were at about 108.5. So they've rallied about almost 5 handles since then. So I agree. It's not bullish news there. What is it? Outcast ED. But the market doesn't seem to agree. It's lifting all boats, including Disney. Now, the big question now, we're Disney annual pass holders. We were wondering, is the park going to reopen as scheduled there in mid-July? Obviously, we know Disneyland is not, but Disney World's still an open question. I'm not going to go even if it opens, but I am kind of curious about it. And I don't think they will, but they seem like they're on course to still open, even though the rest of Florida seems like it's shutting down again. So weird times afoot out there for Disney as well. All right. X Series X. Do you think we need crazy markets like last March to make aggressive long premium strategies like straddles worthwhile? Well, it doesn't hurt. Mr. Rock Lobster, we were talking about this on the network back in the madness in March. We had a lot of people coming on. Brian on our OPR show talking about long straddles. A few other shows we were talking about long straddles. And lo and behold, they actually worked. And that just shows how crazy the markets were back in March. What do you have to say here for X Series X? Mr. Rock Lobster wants to know, do we really need crazy times like March for those long straddle trades to really work?
Well, actually, we have an edge hunter sheet for that. So what you're mostly just looking for is under, higher realized vol. It can be it doesn't have to be March, it just can be any time. The market can discount implied vol for a period of time for a lot of reasons. So that's when it's the best time to buy it. And so I would say that was an exceptional time to buy it, to be honest, because that doesn't happen very often. 90 VIX. So the market can't, when the realized vol's that high, implied vol almost can't be expensive enough, so it's super high, but you just hold on to a trade for 2 days, and then the SPX moves 250 points. So, you could buy almost anything delta neutral and make money at that point. So what I would say is, and that happens. I mean, that's something that we look at every day in our pro chat room on a constant basis. Just on all the names that we look at. When is realized vol? When the market's underpricing the implied vol, and what you do is, you try to, at least for me, I try to set up a cheap shot for a couple of days. So if I can buy option premium for 3 days, usually I don't hold it more than that, delta neutral wise, that is. And if I see that I get kind of a free ride for 3 days, I'll put it on and see what I get. And sometimes it works great. Other times it's kind of flattish. And, if I'm wrong, it's usually just a small loss. So it is a way to trade that stuff, but you want to get good prices for the options you buy first, I would say. Yeah,
and of course, in the teeth of that madness, it didn't really matter. Anything you bought kind of worked out there. So, yeah, that just shows how unprecedented those markets really were. Let's see. We got time for one more here. Let's go to Jules. Jules wants to know, I like to sell out-of-the-money puts. When the stock moves against me, I typically leg into a spread by buying another out-of-the-money put in the same expiration. Okay, we're with you there so far. This usually unlocks some of the money that was tied up in margin. I then use that to buy out-of-the-money calls on the same underlying to set up for a reversal. Thoughts? So, Mr. Uncle Mike, this is an interesting approach here. Selling out puts, the old premium harvesting, seen that a million times. When it starts moving against them, they leg into a spread, so mitigate their risk. Kind of interesting. But they also do go the extra mile of, if they think it's going to reverse, taking it off or anything like that. Instead of doing that or winding down the position a little bit, they pick up some out-of-the-money calls to play on a pullback. What are your thoughts on this, sir, as opposed to just unwinding or adjusting the position?
I mean, I'm typically not, I've never been good at legging into spreads. I shouldn't say never, but it's typically not my thing. I remember when I first started trading, I was making a ton of money off of short put spreads. And I realized after a month or two of doing it, and this is almost 20 years ago now, that if I just start off with just shorting the put, market goes up a little bit, I buy the long leg of the put, then after a while I get a lot better rates of my return. And then that worked really well until one day that the short put went against me on a pharmaceutical downgrade. And so I guess I'm still kind of gun shy from that experience, or I saw PTSD from that experience almost 20 years ago. So I'm typically not a fan of that unless you have the capital to own the stock should the stock go against you first before you can leg into that short put, before you can buy the long leg of the put spread. So I'm okay with it, but just make sure that you have the money to take on the stock should it go against you before you have the protection.
Mr. Rocklops, the same question for you. What are your thoughts on not quite adjusting, but legging into a spread and then adding on an out-of-the-money call kicker for the reversal, sir?
So when I say a risk reversal, I start with a short put spread anyway, and if it looks like it's performing, then I'll go buy a call. I generally don't buy the call first. As far as, I agree with Mike. You sell puts that you can afford to take delivery on decent stocks if you're going to do that, because you can get into kind of a bad daisy chain if you don't. It's funny, I just had a conversation with one client. He's like, instead of selling 10 lots, I just sell 2 lots, and it's a lot easier because you can always take delivery. You can always roll if he wants to. And, if the company's halfway decent and you're being a little bit smart about where you're selling a put, you can make money doing that. But I would say put spreads, a lot less margin. And you just keep those dollars on the sideline when crazy things happen, like COVID-19, for instance.
Yeah, who would have thought we'd be in the midst of a global pandemic? Certainly not Suleiman. He's chiming in again. He's having a crazy day out there, it sounds like. So I'll let him have 2 he says, because he also is chiming in when we said, or you said, Brock Lobster, that Tesla now worth more than pretty much every other automobile company. He says, I'm scratching my head. Does this even make sense? Who is buying it? Do the buyers know their maths? I like the overseas expression of math as a plural. Maths. Yeah, we were just talking about that, Suleiman. We're into crazy town territory for Tesla, but we've been saying that for a while, and it continues to go north. So clearly they're on some other level of analysis out there. But Suleiman having problems wrapping his head around these markets. I don't blame you, Suleiman. These are crazy times. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we got a lot to unpack. We got markets rallying in the teeth of some interesting news. We got Tesla blowing the doors off. We got crazy verticals. We got vol coming in. A lot to unpack, a lot to keep our eye on. Let's start with Uncle Mike, sir. What are you watching for this entirety of this holiday weekend till we get back together on Monday, sir?
I'm watching nothing. I'm watching fireworks. I'm watching boats going by. I'm watching skiers on the back of my boat. That's what I'm watching. But what I'm going to be looking for come Sunday night when I'm watching the futures, going to be curious to see where we're at from the standpoint that we made new highs today, and then we're kind of coming off. We haven't continued with them. The news of today's market is, from what I can tell, solely based on the numbers earlier today. We have not had much of a continuation, so going to be trying to be looking for some type of entry point for the aggressive strategy, but with a smaller amount of money. But for right now, we are negative on the year, so I don't trade negative markets. I'm just funny like that.
You're going boating. You're like the third person in the last few days telling me to go out and get a boat. I'm considering it. It is a great tool for social distancing because that's quite literally what you're doing out there. So kind of hard to have a boat in downtown Chicago, but there are some spots for it. So maybe we'll see. Maybe a boat is in my future. Let's go out to Mr. Rock Lobster. I'm assuming you have a boat because you live on the coast of Maine. Are you going to be using your boat this weekend for the holiday? And also, what are you watching over that period, sir?
I plan on using it. We just kind of have a bucket with a decent engine on it that pokes us around. We're not very adventurous boaters. Getting out of our channel is, I think, a major event. As far as what's going on this weekend, the tinfoil hat crowd, COVID-19, Hong Kong, the Chinese are kind of quietly just sort of taking over Hong Kong. So nothing like don't let a crisis go unused. So Chinese government is slowly kind of tightening the grips. Congress threw some sanctions on it. And back in the old days when we cared about a trade deal, apparently nobody cares anymore at all. So I think as far as the monkey wrench goes and just how we deal with this latest surge, is it just, I think the biggest part is just, I think, closed spaces, people are all going to have to wear masks or something. I don't know how you go to a bar and wear a mask, but I think there's still a lot of issues to be worked out, and we haven't worked them out yet. But as far as Tesla doesn't care and Microsoft doesn't care because these are all stocks that are trading at all-time highs, and it, nothing surprises me because I've seen such goofy stuff. But like the dollars, tech feels like the new treasury bond, and it's a very maybe at some point it won't, but right now nobody wants to buy treasuries for no yield, and I don't blame them. So they're buying, Tesla for $1,200. So go figure. Let's see how long it lasts.
We will see how long it lasts. Indeed, we didn't even touch on the Hong Kong situation. Yet another thing to add to the list of things that the market doesn't give a crap about. It's amazing. Jobs reports, it's so myopic. It's amazing. Yet that's where we live in. That's where we're living right now, listeners. So if you like Suleiman, want to make heads or tails of it, having a hard time, tune in. We'll all discuss it, analyze it together. If you're saying to yourself, I need a little bit more in my air holes, don't worry, we got you covered. I'll be back in exactly half an hour talking futures, options. Our old friend, the once and future Dr. VIX, will be joining me on that one to parse a lot of fun stuff over there. Who knows what we'll talk about? Maybe corn, maybe crude, maybe gold, maybe Eurodollars. You never know what's going to make it on. Lean hogs, you got to tune in TWIFO to find out. Probably have some equity vol in there too, what you guys like, because it's the Dr. VIX. We got to talk about that fun stuff as well. But before we go, let's go back around the horn. Let's go back to Uncle Mike, folks, sir. Back that up. Uncle Mike, sir. If folks are intrigued, they want to learn more, they want you to hold their hands through these insane markets that we're living in together, sir, where should they go? What should they do?
stcharleswealth.com. If you want a patriotic option trader who's not afraid to use options in the long-term portfolio, reach out to me. stcharleswealth.com. Yay, America.
What if I hate America? What about that? Can I still call you up?
No, call up Andrew if that's the case.
Yes, that's where you go. For your deeply entrenched cynicism. Mr. Rock Lobster, if folks want to commiserate with you on your skeptical nature, where should they go? What should they do?
Go to optionpit.com, go to our memberships page to see all the stuff we have. If you hate America, just go buy the EEM, I guess, because that's your choice.
No, EEM. That's why you call Andrew for those things.
There you go.
There you go. Sage-like advice like that. Check out the Rock Lobster. You can find him, of course. Optionpit.com is the place to go. On behalf of the Rock Lobster and the Uncle List of Mikes and myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in such great questions. Keep them coming. And we'll see you back here in a half an hour for a little bit of TWIFO action. Unfortunately, no vol views tomorrow, but we're back again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.